Good day, Doctor. We are from Group 2. The case study of our presentation today is Boston Incorporated. Our group consists of 5 members, which are me, Howard, Angel, Minjie, Richard, and Chongjong. Boston Chicken was founded in 1989 by Scott Big to offer a variety of food, such an alternative to pizza. It provides affordable meals priced under $5, available for both dine-in and takeaway such as fresh, rotisserie cooked meals, originated to replace home-cooked meals. To establish the business, Beck gathered experienced leaders from prominent brands like Blockbuster Video, KFC, and other leading brands to form his management team. Then, the company expanded rapidly, growing from merely 34 stores in 1991 to over 500 stores by 1994. Boston Chicken revenue surged from 5.1 million in 1991 to 96.2 million in 1994, with net income achieving 16.2 million alongside with the number of stores established. To further support their expansive growth, Boston Chicken was public in 1993, followed by a successful secondary stock offering in 1994. In the subsequent year, this company achieved substantial expansion, established over 750 chain stores worldwide. Now, let's talk about how can Boston Chicken become so successful afterwards. Boston Chicken target large regional builders rather than individual franchise holder. For instance, Boston's management not only focus on the franchise fee builder, but also renters and long-term real estate developers. These large regional builders possess strong financial resources and manage expertise to open multiple stores and generate sustainable profit in long term. As a result, Boston was able to secure stable income from franchise fee, royalties, and interest income from the loan provided. Last but not least, the key operational innovation for Boston Chicken is one of the main aspects for the company to become so success. They expand their menu choices, introduce drive-through service, and develop flagship stores to support satellite location. By late 1995, Boston had rebranded itself as Boston Market to keep expanding and growth in the home meal replacement and bagel markets.
In terms of the Boston financial performance, in 1994, the total revenue rose 126% from 42.5 millions to 96.2 millions, which mainly contributed by the royalties and the franchise-related fees that grew by 335%, resulting from the expansions in the number of the franchise stores. So as the sales increase, the cost of goods sold and also other related expenses rise together, like the salaries and benefits to their employees and also the general administrative expenses. So to support its business development, Boston had invested 200, 268.1 millions to their store expansions and also 52.3 millions to build its company infrastructure. It also secured 332.5 loans from the area's developers to further continuous expansions in the future. There are some challenges that threaten Boston Company. First of all is the rising costs and expenses, like the cost of goods sold and also the salaries and benefits to their employees and the general administrative expenses rise. So furthermore, there are also increase in the debts and interest expenses due to the interest from the 130 million convertible subordinated debt and also its short-term borrowing. Furthermore, it also experienced the seasonal low sales from November to February when people tended to stay at home during the winter time rather than travel and go out a lot. And moreover, there are also the intense competitions in the industry that pose challenges to Boston Company, and it has to compete with the leading brand companies like KFC. Finally, Boston's stock price keep fluctuating, raising the uncertainty of its long-term sustainability.
Let's move on the recommendation of issue identified. The first recommendation to tackle the issue of profitability and cost concern is to manage inventory effectively. So Boston Chicken can employ just-in-time inventory management method to optimize the inventory level while staying available to meet client needs. It enables the company to minimize costs and increase the efficiency in utilizing the inventory simultaneously. So just-in-time method requires the company to have a comprehensive analysis on forecasted inventory needed to avoid voidage. At the same time, ensure the company possess adequate inventory to fulfill the needs in the operation. Also, company can negotiate with existing supplier to get better terms and price or search for alternative yet reliable supplier to sustain its product and operation quality. So by investing in automation enables the company to reduce the needs for employees by replacing those repetitive tasks by machine instead of human intensive one to lower the wages and expenses and increase the overall productivity. Other than that, to resolve the issue of seasonality and low sales, Boston Chicken can conduct a seasonal promotion by launching a special offer and holiday themed product to attract customer. For example, like what McDonald's in Malaysia did was to provide product according to the festival, such as offering of prosperity burger and twister fries only during Chinese New Year, and so on. By providing delivery services, Boston Chicken will enhance the sales even in adverse weather condition, as it provides much convenience for the consumer where they can get their food without going out.
So nextly, to address the heavy reliance on franchisees, Boston Chicken can actually diversify its revenue by investing in company-owned stores, hence reducing the dependency on royalties. So over-reliance on franchisees can actually expose the company to many types of risks. So for instance, inconsistent quality control, operational inefficiencies, and also fluctuating the royalty income if the franchisees itself struggle to meet the brand standard or it struggles financially. So another example I would say is let's say establishing flagship locations that prepare meals for satellite stores can enhance the quality control and also the operational efficiency. So this approach is basically like strategies employed by the successful chains like Chipotle. And additionally, Boston Chicken should enhance the franchisee support through comprehensive training programs and also close monitoring of operations to mitigate their financial risks. So, spreading reliance across the smaller and also well-qualified regional franchisees is always better rather than a few large developers. So this kind of approach can actually further balance the risk. Nextly, also to tackle high capital requirements, Boston Chicken should leverage strategic partnerships with certain financial institutions for favorable financing terms. Also akin to other fast casual chains that collaborate with certain investors. So by adopting incremental growth strategies such as maybe converting underperforming stores into a flagship outlets can actually alleviate the capital strain. Yep. So meanwhile, by strengthening financial stability through optimized operations and also technology investment is also crucial for company to enhance their cash flow. Exploring alternative fundings mechanism like revenue sharing models will actually contribute a more robust financial framework. Lastly, ensuring sustainable growth in a more competitive market.
Good day, Doctor. I'm now presenting the fifth and sixth issue, which are intense competition and sustaining growth. To address intense competition, Boston Chicken must focus on strengthening its unique sell proposition, which is UPS, by emphasizing the quality of its home meal replacement concept. It will differentiate from both fast food and traditional restaurants. Next one is building brand loyalty. The Boston Chicken can introduce loyalty programs and penalizing the promotion to build customer retention and encourage repeat business. Last but not least is keep innovation by introducing more innovative menu options such as plant-based or organic meal choice to cater to emerging customer trends and preference. Next issue is sustaining growth. To sustain long-term growth, there are two recommendations which are maximizing the operational efficiency and diversified investment streams. To maximize the operational efficiency, the Boston Chicken can streamline logistics and improve cost management while offering robust support and training to franchise that can ensure consistency, quality, and profitable across the network. The diversified investment stream, the Boston Chicken can invest in technology, which it can invest in predictor software and online ordering system. That one will enhance the operational effectiveness. Next one is diversify the revenue streams through the breakfast offerings, drive-through service, and partnership with drivery platform can create new opportunity for growth. That's all for me.
That is all for our presentation today. Thank you, Doctor.